I'm champion trader Kevin Davey, and today I'm going to give you a mini S&P ES algo that looks like this originally, and with position sizing gets supercharged to look like this. So let's get started. Okay, so before I give you the algo, I want to tell you what an algo is, because some of you might not know it. All an algo is, when we talk about trading, are buy and sell rules that can be programmed and tested with any kind of trading software, whether it's TradeStation, NinjaTrader, Multicharts, Pro Realtime, TradeView, Python even. It's just buy and sell rules, and you program them, and you can backtest, and you can also, most software, automate and automatically trade these. So when you boil it down, algos are pretty simple. I know a lot of people get kind of scared when they hear algo, because you always hear about algorithms out there with social media. The algorithms do this and the algorithms do this. So people get intimidated by it. But as far as trading goes, as long as you can program your buy and sell rules, it's pretty simple. The key with building good algos is to have a process. Now, I use something I call the strategy factory, which takes you from performance goals and runs through a bunch of tests to ensure that you either have a robust trading strategy or you have garbage. A lot of times it's garbage and you won't trade that, but you do get good strategies from this. So you want to have a good process when you do this. So that being said, here's today's algo. By the way, I'm going to be showing you the code, but if you want to download the actual code for TradeStation, also get plain English rules, get a workspace for TradeStation, and some more info, all you have to do is sign up. In the description, there's a link, and you sign up for my email list, and you'll automatically get all that for you. So you don't have to stop the video and write it down. But if you want to, you can do that too. But here's today's algo. And one of the things I like to do with most of my algos is I like to have them pretty simple. And my definition of simple is if you can write them on a cocktail napkin. So I kind of virtually did that here. And this strategy, to go long, you just have to have a long-term uptrend, and you also have to have a closing price that's in the lower to the mid-range of a Keltner channel. So that uses the Keltner channel indicator, in case you don't know about that. And obviously to go short, it's just the exact opposite. But that's the general idea. And then I also have a stop. You'll see that. Pretty simple, okay? And what I've found is a lot of times the simplest ideas work the best. So that's why I do it. So here are the rules defined. I'll go through this really pretty quickly, but you can this is TradeStation code, and I think you'll be able to follow along no matter what trading language you use, because TradeStation uses easy language, which is just that. It's pretty easy. So first, what you do is you calculate the upper and lower Keltner channels. It's a 5-period Keltner channel with 0.5 ATR, and it uses the closing price. So you calculate the upper and lower. Then you calculate something I call it's called the Keltner stochastic, where it basically tells you where percentage-wise from 0 to 100, where the closing price is in that channel. So if the closing price is at the high, this value is going to be 100, and if it's at the closing price is at the low, it's going to be 0. So it varies from 0 to 100. Okay, I'm going to trade one contract just to start off, and now I get to my entries. And my entries are symmetric, as you'll see. You either go long, the exact opposite, you go short. If the close is above the close a certain number of bars ago, and the Keltner stochastic is below a certain threshold, then you buy the next bar at the market. And the exact opposite. If the short-term or long-term momentum is down by this bar or this condition, and the stochastic is above a threshold, then you sell short. Okay, so that's the entry. Then if you're long and the stochastic goes above a threshold, you sell. And if you're short and the stochastic, having trouble pronouncing stochastic, if that's below a threshold, you buy to cover that short and you get out. Then we also have a stop loss. For the short side, we're going to use 1 times the ATR, and for the long side, we're going to have 4 times the ATR. So we're giving long trades a little more leeway than the short trades. And this is nice because you don't want to get caught too long in a short trade, okay? Because then, the price could keep going up, and we know there's a long-term bias with stocks. So that's basically the code. And again, if you want the code, the workspace, and more, you can hit this QR code. You can also type this in, or you can go to the link in the description. Okay, so with these rules, I've highlighted 3 different variables that I'm going to optimize, or that I did optimize: the momentum length long, the momentum length short, and also that threshold. Okay, so those were things I optimized. Here's some sample trades. You could see, it's not every trade wins. Look at this. There's a nice big stop loss here on a long side, and this is recent in March and April of 2025. But this is always a good check when you code up something, just to make sure it's giving trades. It's giving long trades. It's giving short trades. That's the important part. So here's where I show you the development test results. So originally I tested this from 2007 to June of 2021. And that's what the equity curve looks like. Pretty good up until about trade 350. And then it doesn't look that great, although then towards the end it started making new highs. But in general, it's a pretty good equity curve. And then once it went live starting in July of 2021, that's what it looks like. So it really took off once we went live. So it had good backtest performance and then good live performance, which is in the light blue. And that's probably the most important part, is to have that light blue area. That's after you've stopped development, so you haven't made any changes to the strategy. You're just going with what you've got and see how it does. So that's a really good test, and that's the one I like that a whole lot better than the back test itself. Little hard to see here, but it makes money from the long side and the short side, which is nice. It wins about 70% of its trades. That's actually pretty good. And you can see I've included slippage and commission down at the bottom. So this just gives you an overall idea of how this strategy's performed. Now, the way I back tested here was I did an out of sample back test. There's 4 different ways, primary ways, to back test. There's one where you just start trading live. You don't do any back test. Hey, that's great if you don't want to optimize and worry about curve fitting. You just go live. But the problem is you don't know if a strategy is going to work or not when you do that. So that's the no back test. I don't really recommend that. You can do an optimized back test where you just take all your data and you optimize it. I would have, in this case, optimized from 2007 through 2025, of April of 2025, found the best parameters and just use those. That's a terrible way to go. So what a lot of people do is they do an out of sample test where maybe the last couple of years are out of sample. And I did a variation of that. Normally what I do, and I'm not showing you in this video, but I have a version of this strategy that uses walk forward testing. That's the best way, I think, to test a strategy. And check out my channel. There's other videos I have on walk forward testing. I think it's something you should do. So to me, that's the best way to test. Okay, so I mentioned how you should do back testing and how not to do. I'll tell you what most people do, and where most people get into problems. They take all their inputs, all their entries, everything with all their historical data. Here I'm just showing 5 years of data, but let's say it goes back to 2007. Could be 15 years of data. You run thousands of iterations. You get the best parameters, and then you start trading. If this is something you're doing or something you're contemplating doing, don't do it. Trust me, this will not work. It might work on one strategy now and then, but you do it on enough strategies, you're going to have terrible results. This strategy I showed you for the mini S&P, but it also works for the micro mini S&P, the MES, which is 1/10 of the size. The only difference really, the price action's a little different, so sometimes you'll get some different entries and exits, and the commissions are a little bit more, and the slippage is a little bit more percentage-wise. You know, this should be 1/10 of the ES for price movement, but the commissions are going to be a little bit more than 1/10. But you can see here it works good on the MES. So if you want to start with a limited amount of money, this would be a way to do it. Okay, so that's the strategy, the baseline strategy. It's pretty good. But now, let's supercharge it. And we're going to do that with position sizing. Okay, so what I have here, I have the initial rule. And remember before, I had this if statement, and then I said buy next bar. But now I've put 2 extra lines of code in here. And this is for the ES. You'd have to adjust it for the MES. But it just says, hey, if I have this use position sizing flag equal to 1, then I'm going to base the number of contracts I trade on my net equity, which I calculate up above. I don't show you that. I divide it by 15,000 and multiply it by 0.33, add 1 to it. So I'm always trading 1 contract at least. And let's say my net equity was 45,000. So I've made money with this already. 45 divided by 15,000 is 3 times 0.33. That would round to 1. So then I'd be trading 2 contracts. And using that, I can grow the number of contracts I trade as I gain profit. Now, I've also limited, to show you a limiter, I said I'm not going to trade more than 15 contracts. You know, there's you've probably seen strategies out there that show, oh, trade 200 ES contracts. Well, you know, trading 200 is, one, it takes a huge account to do that, and 2, it takes a lot of guts, and most retail traders aren't going to be trading that many, but 15 is probably a reasonable number for the upper end because you're going to slowly grow with that. You're not going to start with it. That's where you're going to end. So that's the position sizing code I had. You can do a lot of different position sizing techniques. I just picked this one. I tried not to fool around with it or optimize it. This is just something I think is a comfortable position sizing. And here's the results. It ends up generating almost $1 million in profit. Again, the long and short side, it generates more long, which you'd expect with the mini S&P, but it also does a good job on the short side. And here's the equity curve. Now, there's some big drawdowns here for sure because you're going to be trading bigger size. So you're going to have to withstand bigger drawdowns. But over time, you can see many of the years it does pretty well, especially in the later years as you're trading those 15 contracts. All right, so again, if you want to see this strategy, just get all this information where you don't have to program it yourself and you have TradeStation, just hit that QR code, sign up for my email list. If you're already on my email list, well, when I sent you the email about this video, you would have already gotten this package, so you don't have to sign up again. All right. So that's it. ES strategy. You can see when you supercharge it with position sizing, you do pretty well. The point here is, if you are serious about algo trading, make sure you get good education. You take the time and effort to learn to do things the right way. Over optimizing and just picking the best set of parameters, like I said, that's not the right way. So you want to avoid that. If you like this video, give it a thumbs up, hit the subscribe button, leave a comment, let me know what you do. I'd be glad to hear it, and I reply to all comments. I'm Kevin Davey. Have a great day.